in this chapter, when we were doing cash dividends and stock dividends, I expressed my concern that treasury stock didn't follow us from chapter 13 to chapter 14. They're both about corporations. I wanted treasury stock to happen in the second chapter as well. So we tried to work a couple of exercises, and we talked about treasury stock a lot, but it was always zero, and you really didn't see the impact of it. So the purpose of this handout is to deal with treasury stock, to weave treasury stock in it. But there's more to it than that. We're going to get to practice, authorized, issued, and outstanding. We're going to talk about a stock split, ultimately. We're going to really talk about a lot of the important things in both the corporate chapters, and treasury stock being the theme in both of them, okay? So I'm inviting you to read with me and work with me. At January 1st, the beginning balance, at the beginning of the current year, S Corporation had issued 40,000 common $100 par shares of the 200,000 shares they had authorized. The retained earnings balance was $947.5. The following transactions affecting common stock occurred during the current fiscal year. On February 5th, the Board of Directors declared a $2 per share dividend on the common stock payable on March 5th to stockholders of record February 25th. Is that, what kind of dividend is that? Is that a cash dividend or a stock dividend? That's a cash dividend. How'd you know one handout? How'd you know, Nate?
$2 per share.
It says they're going to pay cash, $2. $2 per share. That's a cash dividend. I'm looking for a volunteer who would make me better. Nate?
Debit cash dividends, credit dividends payable.
Debit cash dividends. Credit dividends payable, how much, Nate? Is it based on authorized, issued, or outstanding, Nate?
I'm going to say authorized.
What do you think, class? Which of these terms is the best term for describing shares with rights? It's outstanding shares. Do we know outstanding shares here?
No.
What do we know?
Issued.
We know issued. How many are issued, Clay?
40,000.
It says in the problem, 40,000 are issued. Yes or no?
Yes.
How many are outstanding? New volunteer? David?
40,000.
How do you know?
There's no change.
There's no mention of treasury stock in the first paragraph. So this is kind of like the book did it. 40,000 minus 0 is 40,000. Now back to you, Nate. 40,000 shares are outstanding. What was the dividend?
80,000.
$2 per share. 40,000 times 2 is an $80,000 cash dividend. If you're with me right this minute, say yes.
Yes.
Paid the dividends declared on March 5th. Clay?
We would debit dividends payable for 80,000, and then credit cash for 80,000.
It's a cash dividend. We're paying cash. If you're with me right this minute, say yes.
Yes.
May 1st. The Board of Directors authorized the reduction of its par common from 100 to 25 when the market value of the stock was 240. What is the name of this action that just happened? What is this, Owen?
It's a stock split.
This is called a stock split. What is a stock split, Owen?
If I had one share worth $100, I now have 4 shares worth 25 each.
Is correct. Another way to say what you just said is a stock split reduces the par. And in reducing the par, you replace old shares with more new shares. And the impact of this is that you drive the price down in the marketplace. Some stock notoriously sells for a high price. When I was in school, one of my professors said, high-priced stock discourages the freedom of entry into and exit from the marketplace. It's still true. Let me explain what that means. If you had $3,000 to invest, would you like to go buy one share that cost you $3,000? Or would you like to go buy a lot of shares that cost you $10 per share? Somehow when we buy stock, there's this feeling that we have more when we have more. You with me or not? So if your stock is selling for a lot in the marketplace, there's not a lot of people that can buy them because they can't afford them. And therefore, the people who own them can't sell them very well because nobody's wanting them. Let you hear the expression again. High-priced stock discourages the freedom of entry into and exit from the marketplace. And there's some merit to that. Now, part of our attitude about our stock in the marketplace is, who cares? I don't get the money. Other people are getting the money when they sell and buy and sell and buy in the marketplace. The only time it affects me is on the original issue of stock, what I sell it for. But sometimes we are concerned about how others perceive us. We want to be viewed well. We want people to like us. Facebook, like. Yeah. We want people to like us. Our corporation wants people to like us. We want our stock to have a healthy price, which is indicative of the public's perception of us, like. So if our stock is really, really, really high priced and people can't buy it and sell it very easily, maybe we would like to drive the price down by splitting the stock, which is exactly what this is. The board of directors authorized the reduction of par in its common shares from 100 to 25. So the old 1 share, Owen says, becomes 4 shares. 25, 25, 25, 25 is still 100, but now we're asking them to give back their 1 share and allow us to replace it with 4 new ones, each of which would have par of 25. If you understood what I just explained, say yes.
Yes.
If you've got a question, I'd try to entertain it. Right? Now, Owen, you're my volunteer.
Yes.
Make me an entry.
No entry. With the exception of maybe a memo.
You see this little chart here?
Mm-hmm.
With all these columns, debit, credit. Come on, Owen. Make me an entry.
Maybe a memo just to record the historical fact that you made a split.
Memo is an old holdover from when we wrote these out by hand. Yes, there needs to be some entry made here, some historical record of the event. But I don't even know what a memo is anymore electronically. Okay, I don't know where we write that.
Yeah.
Someplace we need to make note of this. Maybe it's in the minutes of the board of directors meeting. Someplace we've got to know what happened. Now, I'm curious about the impact that just happened. So let's make some calculations. Maybe the memo entry should include these new facts too. Like, after the split, how many shares were issued? Well, refresh my memory. How many shares were issued before the split?
40,000.
There were 40,000 issued, weren't there? Didn't we determine that in the first paragraph? And if we split it 4 for 1, then how many shares are going to be issued after the split? 160,000. If you're not with me right this minute, you need to ask me.
So they actually do physically send the 40,000 back in, and you send all 160 out new. You don't just send out 120 new.
No, because the 40, yes.
Well, it isn't.
You trying to trick me or what? Those 40,000 old ones we have to get back because they say $100 par.
Okay.
So we have to get those back. And we're going to send them new ones that say $25 par.
So we really do.
Okay, we really do have to get them. So, how many shares are outstanding now? There were none in the treasury. There's still 100. They're issued and outstanding. There are none in the treasury yet.
Where did the 160,000 come from?
There were 40, and I took each of these back and gave 4 to replace it. It was a 4 for 1 split. 40 times 4. It's good to ask. Are y'all with me?
Yes.
Estimate the market price. If these shares were selling for how much before the split? Huh?
240.
Each?
The market value is
Ah,
is
on May
240.
1st, when the market value was $240. These shares of stock are selling for $240 each before the dividend, before the split. Clay?
Well, we would take 240 and divide it by 4 to give us $60.
$60 is the price afterward, all other factors equal and held constant. No hurricanes, no planes crashing into buildings, no assassination attempts on the Pope. All other factors equal and held constant. If we drive this price down, if we replace each of these shares, if we flood the marketplace with all these new shares, are you with me on this $60 a share thing?
Yes.
Yes? Purchase 2,500 of Treasury shares at $65 each. Abby?
You debit treasury stock for 162,500, and then you credit cash for 162,500.
Way to go, Abby. Tell the class how you got it.
You multiply the 250 or 2,500 shares times $65.
2,500 shares at $65 each is this amount you spent. Give me a word to describe this 162.5. 4 letters? Par?
Par.
No.
No.
David?
Cost.
We always keep up with treasury stock at cost. This is cost. Doesn't have anything to do with par, doesn't have anything to do with anything except cost. Eddie? What kind of an account is treasury stock? Asset, liability, capital, revenue, expense?
It's an asset.
It isn't. It's often confused. If we're looking for a best wrong answer, that's the best wrong answer. If I buy somebody else's stock, it's an asset. If I buy my own stock, it's not an asset. How confusing. If I buy my own stock, what is it, Abby?
Capital.
It's capital. Capital's normal balance is?
Credit.
Treasury stock's normal balance is?
Credit.
No.
Debit. Sorry.
Debit. That's why you debited it. You just created it. Normal balance. There it goes. Now, explain your way out of that one. Capital's normal balance is credit. Treasury stock's normal balance is debit. Therefore, treasury stock must be contra capital. It is. Contra capital. Contra paid in or contra retained? Abby?
Contra retained.
Nate?
Contra. I don't know.
Braxton? Contra paid in or contra retained, Charlie?
Contra paid in.
Laura?
Neither.
Jason?
I would say both.
I couldn't have written a better script. I can make a case for neither. I can make a case for both. But it's not contra paid in, and it's not contra retained. It's contra to the whole thing. It's the only contra account I know of that's not contra to something specific. It's contra stockholders' equity. So,
On the
Brooke?
balance sheet, don't you list it with the paid in excess of capital, or in excess of like common stock?
Brooke, ask me the question again. On the balance sheet,
Where
ask
does
it.
treasury stock go? I thought it went in the paid in section.
I'm glad Brooke asked. In fact, it's so good that Brooke asked, it's going to be worth finding an example in the book. We did this in class. It's worth doing it again. Would you look in chapter 13, I believe it is. There's 2 stockholders' equity sections that we could use to illustrate it. I'm just looking for one of them. It's the one on page 612 that we could use. You can look at the one in your book if you'd like, but I'm going to gesture to the one on the screen. So here is total paid in right there, $3,600,000. And here's treasury stock, 80. Is the 80 subtracted from total paid in? No. If it were, it'd be right after it. Is the 80 subtracted from retained this 1 million figure right here? No. The paid in and the retained are summed to get total paid in capital, and then the treasury stock subtracted out. That's the big deal I'm making. Treasury stock is not contra paid in, it's not contra retained, it's contra the whole thing. Did that answer your question, Brooke?
So what is the from treasury stock?
Oh, this one is related to the excess over par that I said treasury stock doesn't have. When we originally issue common stock for more, we create paid in capital in excess of par. Well, if we later sell this treasury stock, and we probably will, for more than we paid for it, then that's additional paid in capital from treasury stock. That's this. That's not what we're talking about. That's additional paid in capital from treasury stock. This is the treasury stock. What a good question. Thank you for helping us clarify that. Did that help somebody else too? Good. It's good to ask. Justin?
Can you explain the contra paid in and contra whatever you put on both sides?
For treasury stock?
Well, I'm just kind of confused on that whole thing about contra.
That's what I just tried to do, Justin. I thought that your seeing this would help. Can you see what I'm gesturing toward?
Yeah, I saw what you were saying.
No, I don't want you to brush it off because you didn't get it. I want you to get it. If I'm not subtracting treasury stock from paid in. If it were contra paid in, I'd be subtracting it directly from that. Can you see that?
Yeah.
Is that better?
I can see.
I'm not subtracting it from retained. If it were contra paid in, I'd subtract it from that. If it were contra retained, I'd subtract it from that. I'm not subtracting it from that literally. Let's think about sales returns and allowances. Here's sales. Sales returns and allowances is right next to it, contra to that. Subtracted from that. Accumulated depreciation is contra equipment. Subtracted from that, right next to it. Nothing in between. Treasury stock is not subtracted from paid in, and it's not subtracted from retained. It's subtracted from the whole thing. It's contra to the whole thing. Is that better? You're not just trying to get me off your case.
No, I mean,
Really?
yeah.
Anybody else? So, we're on this entry, debit treasury stock, credit cash. It's a chapter 13 skill. We're trying to get it to spill into chapter 14. If you're with me right this minute, good. If you're not with me right this minute, I'm willing to spend some time here before we move on. Here we go again. So, are we on June 12th? The board of directors declared a 50-cent per share dividend on common stock outstanding, payable July 8th to stockholders of record July 1st. I need a volunteer and I need them fast. David.
Cash dividend, debit, and dividend payable.
Good, real good. Have we been here before, David?
Yes.
We've done this before today. How much, David?
$78,750.
Now, I'm taking a risk. When I click this, is that the number I'm going to reveal? I have no clue. I need a solution over here to be like. Say the number again, David.
$78,750.
Way to go, David. Who's with David and me right this minute? David,
Yes, sir.
tell me how you got it.
Okay, well, we had to calculate what was outstanding, and so to do that, we had to subtract the 2,500 shares of treasury stock from the previous.
It may be time that we get us a little running total of how many shares are outstanding. We started the problem with 40 outstanding. Yes, David?
Yes.
And then we split the stock, and that became 160,000 shares outstanding, and we wrote it down.
Right.
It was at that point that we probably should have started keeping a better record, maybe out in the margin. Then what happened, David?
Well, then we purchased some treasury stock.
How many?
2,500.
2,500 shares of treasury stock, reduced the number of shares outstanding to
$157,500.
Are y'all with me or not?
Yes.
Authorized, issued, or outstanding? Which deserves a cash dividend?
Outstanding.
There are 160 issued, 160,000 issued. But some of them are in the treasury. Do treasury shares get a dividend?
No.
No. So we're subtracting out the treasury shares to get 157.5 and multiplying that by
50 cents.
50 cents to get 78,750. If you're with me right this minute, say yes.
Yes.
If you've got a question, now would be a really good time to ask. Paid the dividends June 12th. Volunteer hand up. Joel?
Debit dividends payable, same amount, 78,750, and then credit cash for 78,750.
Good. Real good. The balance of dividends payable is 0. We had an obligation to pay it off, and we did. So, is that a question here, Frankie?
Dividends payable is a temporary account, that's why it gets
Dividends payable is a current liability,
current liability.
and we're going to pay it, well, technically the definition of a current liability is you're going to pay it in less than a year. The board of directors said when they declared it June 12th, they would pay it July 8th. Short period of time. Current liability. Anybody? Sold 500 of the treasury shares for $70 each. Laura?
Debit cash, 3,500. I mean, thousand.
Which is it?
35,000.
Let's do the parenthetical notation right this minute. Laura, how'd you get it?
500 times 70.
500 shares sold at the sales price $70 each is $35,000. Laura, I saw 5 hands up when I called on you, so I'm going to kind of share this. Would some other volunteer do part of this entry for me? David?
Credit treasury stock for $32,500.
Credit treasury stock for how much, David?
$32,500.
How on earth did you get $32,500?
Well, we account for treasury stock at cost.
At cost. What a novel idea. Not par? Cost. What did we pay for these shares?
$65.
$65 a share times 500 shares is $32,500, David? Auditors?
Yeah.
Yes.
I thought debits credits had equal. They don't. Mark, is your hand up to answer this question?
Yes.
Good. Let me hear it.
It's paid in from treasury stock 2,500.
Paid in capital from treasury stock.
Yeah.
How much?
2,500.
Brooke, that's how it got there. Thank you. Mark, is this revenue?
No, it's not.
Class, is this revenue?
No.
You bought it for this price and sold it for this price? Gain? Yes? Revenue? Mark?
It's retained earnings.
It is not retained earnings.
No.
What is it, Mark? Is it revenue?
No.
Is it revenue, class?
No.
What is it, Mark?
It is.
Why is it not revenue? I need a hand up. Why is it not revenue, Andrew?
Because that comes from like selling goods to a consumer, and this comes from us.
Is the correct answer. Now, forget about the selling goods to consumer part. It was correct. It helps make your point. I want it succinctly. Don't tell me about another thing. Tell me about this thing. That part of your answer.
It came from owners.
Thank you. That's what I was shopping for. It came from owners. Where did it indicate that, Mark, in the name? What does it stand for?
Paid in.
Paid in. It came from owners. This is not revenue. If I bought, what's the name of my company? S Company? If I bought X Company and then sold that stock for more, that'd be revenue. That'd be gain. That'd be I'd have to pay tax on it. If you deal in other people's stock, that's income. But if you buy and sell your own stock, that extra amount that comes in came from owners. That's treasury stock. That's additional paid in capital from owners. If you've got a question, please ask me. Joe?
Yes, I thought that we always kept at par. So I was wondering why it wasn't $100 instead of the 65 that was last year.
There are two good reasons. One, what you thought was true about the original issue of stock. On the original issue of stock, we always keep up with it at par. And this is not the original issue. We issued these shares, we bought them back, and now we're giving them out again. They're the same shares that are already issued. They are already in the common stock account. For us to credit common stock again would be wrong. To keep up with them at par again would be duplicate effort. On the original issue of stock, it's at par. This was treasury stock, and we bought it back on the other side of this handout and accounted for it at cost. Now, the other thing you said in your explanation was, and I thought par was 100. Well, we changed par. We split the stock. Par's not 100 anymore, par's 25. So that's another reason. Even if we were keeping up with it at par, it wouldn't be at $100. You're not taking into account the split.
Okay, so we keep up at the cost of our last purchase.
Of treasury stock. Treasury stock. Did I answer your question? It was a good one. Who's got one?
Okay, back on the balance sheet, it says from treasury stock, not paid in capital. Is that because it says
Well,
additional?
doesn't the heading say additional paid in capital?
Yeah.
So it's all of these, so it doesn't say, but that if you looked over in the ledger, that would be the name of the account in the ledger. So they had more than one account that started with paid in capital from. Paid in capital, paid in capital, paid in capital. And so they just put a heading for all of them on that illustration in the book and had from this, from this, from this.
Okay.
They're all paid in. Mark?
Can you say one more time what the account was for paid in capital from treasury stock? It's from owners, the owners gave it.
Uh-huh.
Is it just,
It's paid in capital.
it's just paid in capital?
It's that means capital,
Yeah.
paid in capital. Goes on the balance sheet, belongs to the owners, owners claim on assets. Which one of those is going to make you confident? I don't know how many other ways to say it. May I go on? Then the problem says, September 1st, the board of directors declared a 5% stock dividend on outstanding common shares to be distributed October 16th to stockholders of record September 20th. The market price of the stock is $75 a share. Turned up the heat a little bit, didn't we? Who's going to help me out here? Clay, let's make us a calculation, shall we?
All right.
Do we need to know right this minute the number of shares authorized, issued, or outstanding, Clay?
Outstanding.
We need to know outstanding shares. Outstanding shares have rights. And the last time David and I had a conversation, we wound up with 157.5 in outstanding shares. Here's our running balance of outstanding shares. What can you say happened since the last time I updated this?
We sold 500, so
That was this October the 29th entry, where we put 500 shares back in the hands of the shareholders. Yes?
yeah.
Clay? Yes, everybody?
Yeah.
157.5 plus 500 is 158,000 outstanding now, right, Clay? Right, class? We're starting with the 158,000 old shares and declaring what percent dividend, Clay?
5%,
5% of 158,000 is
7,900.
anybody?
Right.
New shares. Then what happens, Clay?
The stock dividend, this is the market price.
I need to multiply that by three things.
Okay.
I need to multiply that by market, par, and the excess. What's market in this problem, Clay?
75.
What's par in this problem, Joel?
Par, 45.
Yes, way to go, Joel. What's this excess, class?
50.
So let's multiply these out and find the amounts of this journal entry we're making. Have y'all seen a format similar to this before?
Yes.
I do it this way every time. And I'm not your boss. I can only make suggestions. It wouldn't be a bad idea if you tried it. if you try it in a similar format to the one you've seen demonstrated, maybe you can remember it better than going out on your own and figuring it out some way that always works too. But if you see this one and try to follow the pattern, it might help you. So let's do the math. What is 7,900 times 75? Clay?
592,500.
Auditors?
Yes.
What is 7,900 times 25? Who's got it for me? Somebody other than Clay? David?
$190,500.
Did I write what you said, David?
Yes.
May I have auditors on this number?
No.
197.
197.
Did I just write it down wrong, David, or did you say it wrong?
Oh, I had it.
It's okay. Say it to me now, David.
$197,500.
See how good it is to audit your work? So how about 7,900 times 50? Who's got me this number? Whoa, Danielle.
395,000.
Do I have the facts right? Yes or no?
Yes.
Are we in one accord on this?
Yes.
Now, let's take those numbers and turn them into this journal entry. Hold your breath. Are those the numbers we just came up with?
Yes.
Sweet. If you're with me, say yes.
Yes.
Let's journalize a stock dividend. I need 3 volunteers. Justin, debit stock dividends. Where are all those hands? Joel
Credit common stock.
is incorrect. It's okay. Brooke,
Stock dividends distributable.
last volunteer. Owen.
Paid in excess of our common stock.
Justin, what kind of an account is stock dividends? Didn't you give me that account?
Yes, sir.
No. Sure glad you came today.
It happened to.
Stock dividends. Justin wants to use a lifeline. Hand up, help me out. David.
Contra capital.
Contra capital is the right answer. Contra paid in, contra retained, contra neither, contra both.
Contra retained.
Contra retained. Reminds me of,
Owner's journal.
I've never heard such an account title except in chapter 1 of this book. What would Pacioli say about that? You don't even know who Pacioli is, do you?
Founder and father of the
Thank you. What's the name I prefer?
John Doe John.
John Doe Drawing, thank you very much. Reminds me of John Doe Drawing and reminds me of
Cash dividend.
cash dividends, John Doe Drawing, and stock dividends are all contra capital for pretty much the same reason. And they're all closed
Fourth step.
in the 4th step of closing entries. That's why they're alike. That's the connection I'm trying to draw here. Stock dividends is contra retained earnings. I need a nod. Yes?
Yeah.
Who told me stock dividends distributable, Brooke? Talk to me, Brooke. What kind of an account is stock dividends distributable?
A temporary stockholders equity account.
You missed one adjective right in the middle. Temporary stockholders. Temporary paid-in stockholders equity account is correct. Why paid in?
Because it's retained.
Be,
Contra retained.
no, you said paid in. Temporary paid-in stockholders equity. Now I'm trying to examine these adjectives. Why this? Why this? Why is that important? Why did we tag it with that? It's paid in because it's about to become common stock. Yes? Common stock is paid in. It's temporary because it's about to become common stock. These are shares of stock waiting to be issued. How many shares? 7,900 new shares waiting to be issued. They're going to become paid in. And it's market that is driving that. Whatever market was on the day the board of directors declared the dividend, which was $75 a share, is the amount that's leaving retained earnings and becoming paid in. This is paid in and this is paid in. This is temporary paid in. We know what we're doing. We know there's an excess. We're setting this one up so we don't have to deal with it later. It's becoming paid in. Paid in's going up, retained's going down by an amount equal to market on the day the board of directors declare the dividend. Are you with me or not? How many times have we done this week? This is about the 4th time. 5th maybe. Distributed the stock dividend declared on September 1st, Nate.
You debit stock dividends distributable and credit common stock.
Describe to me what happened in this step. Give me the amount first.
197,000.
Where to describe that amount first?
That's the amount of par.
That's par.
Yeah.
What's happening here?
You are issuing the stock that you were about to issue in the previous step.
This one says I'm going to issue it. Sets these aside. This one puts these shares in the hands of the shareholders. They get the stock.
Yeah.
Which reminds me, now might be a good time to revisit this. The last time we talked, the number of outstanding shares was 158,000. What happened just now, Nate?
You just issued more.
How many more?
7,900.
7,900 new shares were just issued. Is anybody with me right this minute?
Yes.
Yes? 7,900 new shares issued is 165,900 has been suggested. I need an auditor on that number.
Yes.
Yeah.
Yes or no?
Yes.
Mark your hands up.
Yeah, how'd you get to 7,500?
70 what hundred?
Or whatever the
7,900?
7,900.
I was hoping somebody would ask.
Oh, from that, okay.
Good question, Mark.
Remember it now.
Question mark. Who's with me right this minute? Let me see. Let me see. Who's got a question? I'm moving to November the 28th, if you're ready. November 28th, the Board of Directors declared a 50-cent per share dividend on the common stock outstanding, payable December 15th to stockholders of record December the 13th. Joe?
Cash dividend, debit 197,500.
And credit?
And credit dividends payable.
I was just going to zero in that first and say, way to go, Joel. Debit cash dividends, credit cash dividends payable. This is how many times we've done this in this handout? This is the 3rd time, I think. Not sure. Is this the 3rd time?
Yes.
How much, Joel?
197,500.
If I click this, am I going to be glad or sad?
I believe.
Can I trust you?
I believe.
Say the number again.
197,500.
Auditors?
No.
I didn't even know Joel. Joel, how'd you get your number?
We previously had 158,000, and then added the 7,900, which got us 165,900, and then multiplied times 0.50 per share.
Sounds like a good process. Come on in, Courtney.
Oh, I got the right number.
How do you know?
It didn't take the
Joel.
decimal, so it's 82,950.
82,950, Joel. Class.
Yes.
Your process was good, Joel. Who's with me right this minute? What happened differently in this exercise than the ones we did in class? We had lots of changes in outstanding. We had to kind of keep up with it. We had treasury stock affecting that, stock splits affecting that, stock dividends affecting that, outstanding shares changing all the time, and their impact on the cash dividend ultimately. Are you better off because we did that handout?
Yes.
I was hoping so.